when you have the bravery to imagine and the will to get things done. That's Africanacity. That's ABSA. Corporate and Investment Banking.
You're watching Africa Trade and Business. I'm Ntaoleng Lechela. In this week's episode, we're looking at Sub-Saharan Africa. According to BMI, the region's growth is set to accelerate this year, and we'll be getting into what's driving that forecast. But first up, a look at news from across the continent. Nigerian officials and the World Bank are in talks. Discussions are centering around the West African nation's economic reforms and the support that could be needed to see out those plans. President Bola Tinubu inherited an economy that is struggling with high debt levels, low revenue collections, and widespread insecurity, and so has launched Nigeria's boldest reforms in decades. Kenya will be able to repay a $2 billion international bond maturing in June, and the repayment should help the shilling recover from record lows. That's according to Central Bank Governor Kamau Thuge. The East African country is being closely watched to see how it handles the bond due to its growing debt burden, a sharp drop in its currency, and uncertainty over its access to financial markets. Thuge says funds from the World Bank, other multilateral institutions, and regional banks will be used to repay the debt. Shifting focus to Egypt now, one sign of the country's economic crisis is popping up in precious metals, where sellers say people are opting for silver jewelry instead of gold for traditional gifts. Here's more detail in this package report.
Silver has become the new gold in Egypt, and it's a sign of the country's economic crisis. Traditionally, Egyptian women receive gold jewelry for their engagement, but with surging prices and a weakening currency, many are receiving silver instead. This shop owner says people have also opted for silver as gifts for newborns too, another tradition where gold was once the norm. In January, the price for a gram of 21-karat gold rose more than 120%, to the equivalent of about $126. At his family's shop, Rami Zarin says his family has traditionally relied on silver because they believe it's more stable. He can't afford gold anyway. Those who can have turned to foreign currency or property, but that's out of reach for most Egyptians. Roughly 60% of the country's population of 105 million is estimated to be below or close to the poverty line. Inflation is spiking above 30%. The currency has weakened 50% against the dollar, with more devaluation to come.
While BMI has come out saying that it expects growth in Sub-Saharan Africa to accelerate to 3.7% in 2024, this would be a significant improvement on the projected 2.8% in 2023, and it positions the region as a global outperformer given slowing growth in developed markets. So joining me to discuss what that could potentially support this growth projections and what could stand in its way is Mike Kruiniger, Senior Country Risk Analyst for Sub-Saharan Africa for BMI, a Fitch Solutions company. I mean, Mike, right at the top, right? Let's get started. Achieving 3.7% growth this year in 2024 for Sub-Saharan Africa will be exactly that, an achievement, right? Considering the risks that are still at play. Just take us through the factors you see supporting this picture.
Yeah, absolutely. So we forecast economic growth to pick up this year, as you said, to 3.7% regionally in Sub-Saharan Africa. And I think the primary driver of this really will be stronger economic conditions in the region's two largest economies. So that is, of course, South Africa and Nigeria. So in South Africa, we believe that inflation will moderate. We believe that the South African Reserve Bank will lower interest rates. We also see that where unemployment is coming down slightly, and this will support commercial activity in the country and push up real GDP readings. In Nigeria, on the other hand, we believe that while domestic conditions will remain very weak due to very high levels of inflation we're seeing following reforms and devaluations implemented by the new administration, the operational start of the Dangote refinery, the oil refinery, will lower fuel imports into Nigeria in 2024, push up the trade surplus and support the economy that way. And then, of course, we have some other well-performing economies in the region. Cote d'Ivoire, for example, that is currently hosting the Africa Cup of Nations. There's a lot of investment, a lot of tourism coming into that country right now. So some medium-sized economies will also support growth.
Now, you've talked about some of the largest economies within the region. Let's talk about regional growth from an East Africa perspective. Surely that can't be ignored, with countries like Uganda and Ethiopia expected to achieve growth of 6%.
Yeah, absolutely. So once again, East Africa will be the key driver of economic growth within Sub-Saharan Africa. So it is the sub-region within Sub-Saharan Africa that is going to see the strongest growth. The key reason for that in 2024 is pretty solid growth expectations in Ethiopia. That's the sub-region's largest economy. The country continues to rebuild and recover from the civil war that ended in 2022, and that is attracting investment in critical infrastructure. So we expect pretty strong growth in Ethiopia. And then, as you mentioned, there's other somewhat smaller economies in East Africa that will have, or that will see strong economic growth. Uganda is attracting a lot of investment in the Lake Albert oil project and the East Africa oil pipeline, for example. Tanzania is attracting quite a bit of investment in the country's gold mining sector. And then, of course, we have Kenya, another big economy in East Africa, where we expect inflation to moderate in 2024 as the Kenyan shilling will perform somewhat better this year compared to last year, and therefore moderate imported price pressures and stimulate economic activity.
I mean, of course, this outlook only really applies if everything goes according to plan. And in recent times, we've seen how different factors and issues can just shake up that macroeconomic picture. One issue that had the whole world up in arms was the high inflation, high consumer prices that everyone was experiencing. Now, we've seen that starting to slow down. How much do you think the slowing down of inflation will impact monetary policy moving forward, especially with a number of analysts expecting rate cuts from the big banks like the Fed and the ECB, which would then trickle down to Africa, right?
Yeah, absolutely. So inflation has been incredibly high through 2023, and we believe it will come down in 2024. Now, the key reason for this will be something we call statistical base effects. So because inflation was so high last year, if we're going to compare the CPI index compared to what it was last year, the figures are coming in lower. So that will push down inflation. And then there's other reasons as well. Global food prices have been coming down. We see some more stable exchange rates in, for example, Ghana and Kenya. That will lower imported price pressures. And then, of course, there is the delayed impact of monetary tightening that we have seen across a lot of SSA markets over the last 2 years or so. Mm-hmm. So once inflation comes down, we expect that a lot of central banks across Sub-Saharan Africa will start to lower interest rates in 2024. And I think that we already have some evidence of this playing out. So the Central Bank of Ghana, for example, lowered interest rates by 100 basis points last week on Monday, I believe, as inflation in the country has come down quite substantially. And we expect that other large central banks across the region will follow suit. So we expect the South African Reserve Bank to lower interest rates. The Bank of the Central Bank of Kenya will lower interest rates as well. Zambia is another country. I do quickly want to stress here, though, that this is not going to be a uniform trend. There are some countries that see inflation rising. Angola, of course, springs to mind because of exchange rate weakness following their debt repayments to China that started again last year. So there's very limited scope in a country like Angola to lower interest rates in 2024.
Before I let you go, Mike, it's going to be a year where politics takes center stage, right? With elections happening across the continent. How much how much of a risk rather do these elections pose to the outlook that you currently have out?
Yeah, of course. I think it really depends on the election we're talking about. So I think the three big elections we're going to see in Sub-Saharan Africa this year are the ones in South Africa, Ghana, and Senegal. Now, the ones in South Africa and Ghana will be relatively uncontroversial or uncontentious. Both countries have histories of hosting free and fair elections with limited violence and social unrests that go hand in hand with elections. So while we expect the incumbents in both countries to perform quite badly, overall risks to the political environment will remain quite low, I think, in both Ghana and South Africa. Senegal is a different story, however. So as I'm sure you've seen, the president, Macky Sall, has postponed the elections from February to December, which has increased protest activity quite significantly, as a lot of people in Senegal believe that the country is now backsliding democratically. So we expect more protests in Senegal. There's a lot of uncertainty around who can run in December. So that's definitely going to be an election to watch.
Definitely one to watch. Mike, thanks so much for your time and those insights. So that was Mike Kruiniger, Senior Country Risk Analyst for Sub-Saharan Africa for BMI, a Fitch Solutions company. And that's where we leave things for this week's episode of Africa Trade and Business. From me, Ndawling Lechela, and the rest of the team, it's goodbye for now.
When you have the bravery to imagine and the will to get things done, that's Africanacity. That's ABSA. Corporate and Investment Banking.